everyone, you are watching Weekly Forex Outlook by Liteforex. The US dollar managed to strengthen during the recent trading days and break above resistance levels, rising to the new highs of 2018. Data on Friday showed that US economic growth slowed down less than expected. American GDP added 3.5% in the third quarter. The previous growth was 4.2%. Still, the numbers are very high, and this pace of American economic growth is in line with further rate increases of the Federal Reserve, American Central Bank. This gives the US dollar an edge versus other major trading currencies. In addition, another driver of the American currency are trade tensions between the US and China. They increase demand for the US dollar as a safe haven currency. So, strong US economy and trade tensions are the main sources of the strength of the US currency. Let's now check economic calendar at liteforex.com to see which events await us this week and how can we make money on trading them. On Monday, October 29th, pay attention to release of core PCE price index in the United States. This is one of the key indicators of inflation for the American Central Bank. So any deviations between the forecast and the actual level will have an impact on the US dollar's exchange rate. On Tuesday, pay attention to German unemployment change and to American CB Consumer Confidence Index. Consumer confidence is a great indicator of America's economic health. You can see that the forecast is some lower index than the previous one, and we'll have to see how the situation comes out. Wednesday will be one of the most intense trading days of the week. Firstly, during the Asian session, Australia will release CPI, Consumer Price Index, which is the main indicator of inflation in the country. In addition, Australia releases this indicator only once a quarter, so once in 3 months, and that's why the importance of this indicator is higher. You can see that the forecast is positive, and the higher reading will have a good impact on the Australian dollar. Next, there will be release of China's manufacturing PMI and non-manufacturing PMI. These are the most recent indicators of China's economic activity, and as recently China's economic growth slowed down and there were concerns about what will happen to Chinese economy in the future, these indicators will be highly watched by Forex traders. These indicators will have an impact not only on the Chinese currency, but also on the Australian dollar and New Zealand dollar, as China is one of the key trading partners of these two economies. Germany will release retail sales, and for the euro on Wednesday there will be an important event, release of flash CPI, the most recent inflation indicator for the euro area. So a higher reading will give the euro a chance to recover, while if the indicator disappoints, then the traders will continue to sell the euro. During the American session, the attention will be focused on the release of ADP non-farm employment change. This is one of the key indicators of the US labor market, and many traders actually use this indicator to predict NFP reading, the reading of non-farm payrolls, which will be released on Friday, November the 2nd. So there is some correlation between ADP and NFP, so we can trade the US dollar on this event. And another release on Wednesday, Canadian monthly GDP growth, which surely will give traders a chance to trade the Canadian currency. This was Wednesday, and on Thursday we'll get British manufacturing PMI, and also we'll get the meeting of the Bank of England, one of the key central banks. There are no expectations of a change in the Bank of England's policy. The Bank of England will likely say that there are signs of increased price pressures, but it will stress that it won't increase interest rates until we have Brexit deal done and there is some certainty about that. So no changes are expected, but still the press conference of the central bank will draw attentions of traders and will give opportunities to trade the British pound. ISM manufacturing PMI during the US session, and important indicators of America's economic health. And finally, on Friday, more data from Australia, retail sales and PPI, producer price index, some German manufacturing PMI and construction PMI for the British pound. And the key of event of the day, the highlight, will surely be US labor market data, non-farm payrolls, also known by traders as NFP. This is one of the favorite events of Forex traders to trade because it usually brings all the major currency pairs containing the US dollar in motion. As you can see, the forecast is rather high compared with the previous value of this indicator, and economists expect a pickup in non-farm payrolls after disruption which was caused by Hurricane Florence. So a stronger reading is expected. Also, traders will have a look at American average earnings, important indicator of inflation, and the higher the number here, the better for the USD. And US unemployment rate is important. Regrettably for the US dollar bulls, an increase in unemployment rate is expected, and that would be negative for the US dollar. So you see that a lot will happen on Friday during this time, and trading is going to be really volatile. Finally, Canada will release employment change and trade balance figures on Friday. So this was our economic calendar, and now let's have a look at the charts to understand what are the best trade ideas for the upcoming days. Firstly, I'd like to have a look at American stock market. We have already talked about the sell-off in US stocks, and during the last week this sell-off continued. And actually you can see that on the weekly chart we dropped right to the support line, which is drawn since the lows of 2016. So here a rather strong support is located at 2620 area. The next level to watch will be 100-week moving average at 2580, while resistance levels are at 2700, 27 level, and 2750, where we have the 50-week moving average. So US stocks are hurt by concerns about trade wars. They are hurt by the prospect of higher interest rates of the Federal Reserve, and they will likely remain under pressure. They can test resistance levels, but we don't think that the recovery will be very fast here. Our key currency pair, the favorite pair of Forex traders, euro-dollar. And here we saw the negative dynamics, the downtrend developed from September highs, and currently we are trading right below the level of 1.14. You can see that the pair retraced to the downside almost all important Fibonacci levels, and even the Fibo level of 78.6 is now acting as a resistance. So after we made all this way to the downside, the natural targets are located firstly at the low of last week in the area of 1.1335 and 1.13, the low of August 2018, is the next downside target. Of course, after there was an engulfing candlestick formed on the daily chart on Friday, some recovery to the upside is possible. We will have a look at resistance levels at 1.1410, 1.1430 and 1.1460. All in all, last week there was a meeting of the European Central Bank, but the head of this central bank, Mario Draghi, didn't manage to convince traders that the ECB could start monetary tightening after next summer. Traders are still rather negative about the euro, and the general picture, of course, remains with the downtrend. One possibly a bit good piece of news is that Standard & Poor's rating agency didn't lower Italy's credit rating. They only lowered the outlook for this rating, and there may be some recovery in the euro on this account. Still, the problem with Italy's budget is still unresolved, and this is another negative factor for the euro in the medium term. So our recommendation is to sell the euro on the attempts to recover to the resistance levels we have mentioned, or on the break of the downside levels. The British pound is also retracing levels to the downside. Here we are currently at 78.6 Fibonacci level at 1.28 mark, where the pound managed to find some support, but we can see that still the downtrend remains, and any recoveries will meet resistance at 1.29, 1.2925, and the key level, the psychological level for this pair is 1.30, and it looks likely that until there is a Brexit agreement, the pound won't be able to rise above 1.30 level, so this will be a ceiling for this pair. Doubts about a Brexit deal made the pound go to 2-month low versus the USD. On Friday, Bloomberg reported that Brexit talks are on hold as Prime Minister Theresa May's cabinet couldn't agree how to proceed for the negotiations to restart. So Bank of England will likely keep policy unchanged, so the dynamics of the pound will be likely sideways. It may rebound from the current support of 1.28, but meet the resistance levels and turn down once again. Versus the Japanese yen, the dynamics of the US dollar wasn't very spectacular. The yen is bought as a safe haven, which is a stronger refuge from risk than the US dollar. So you can see that the currency pair is seriously testing the support line, which is drawn since March lows. We are also testing daily moving averages, 50 period moving average and 100 period moving average. It seems like the pair is now consolidating in a triangle, and a break will lead to an increase in volatility. Surely there will be a lot of data releases in the United States this week, and surely the volatility will increase and we'll see big movements of the pair in the upcoming days. There will be also a meeting of the Bank of Japan on Wednesday, October 31st, but as there were no big changes in Japanese economy, no changes of policy of Japanese central bank are expected. As a result, traders can focus on the news from America in trading dollar-yen currency pair. So a break of the lower border of the triangle around 111.50 will make us target much lower levels, 110.35 and 109.75, which is 200-day moving average, while less likely scenario return above these levels here, above 112.40, will lead to a recovery to 113, where we'll have another serious resistance, the high of July, and well, some other levels on the upside are mentioned here. So to return to high levels versus the yen, we need some really strong and impressive economic data from the United States. If there are no such data releases and if American figures disappoint, then the downside scenario will be in play for the pair, and technically this scenario looks more likely. We are coming to commodity currency pairs, to the US dollar Canadian dollar pair. The US dollar strengthened during the last days of last week and is now testing resistance line, although on Friday it failed to close above this level and we got a candlestick with a long upper shadow. We will watch resistance levels on the chart, the level of 1.3130 and the high of last week at 1.3160. 1.3170 is also a resistance to see whether the USD will continue to strengthen. Decline of oil, one of Canada's major exports, contributes to the decline of Canadian dollar and the rise of the US dollar here. Moving averages on the daily chart are horizontal, so we can't say that upside momentum is strong, but the pair is testing upper trend line, and US dollar is certainly more active and will try to make more attempts to get higher. Australian dollar managed to find support at 0.7040 and can after all revisit levels at 0.7150, 0.72, where we will have a really strong resistance levels. A lot of data releases from Australia. Check the economic calendar at liteforex.com. Let's have a look at the chart of gold as well. It managed to show some increases last week, but on the weekly chart we can see that last week's candlestick didn't manage to close above this yellow line, which is a 200-week moving average at 1234.55. There is also resistance of the Fibonacci level and some resistance of the recent uptrend. So it would take some really negative data from the United States to make the gold test this resistance and try to get to higher targets at 1262. If US data are good, then we'll likely go down to retest the border of the triangle and levels around 12.10, 12.07. Crude oil declined for 3 weeks in a row. It met some support here, but if we look at the fundamental picture for oil, the decline in stocks has a negative impact on oil because it creates concerns about lower demand for the oil, and the number of oil rigs in the United States increased, so traders are worried that more oil from the United States will get to the market. So these factors now overweight concerns about the US sanctions on Iran and some problems in Venezuela. So oil will likely remain under pressure, trying to hold to support levels. And another interesting chart to watch in the upcoming days is the chart of the US dollar versus Chinese currency. Here there is an important level of 7 yuans for $1. The Chinese currency has been weakening and it reached new lows last week, so the pair reached new highs. But there is speculation that Chinese authorities won't let this currency pair to get above 7 level, so they will intervene in the market somehow, making the pair reverse to the downside. And these thoughts can offer an opportunity to trade this pair as well. So thank you for your attention for today. This is all. You can find the link to demo trading account in the description to this video. If you liked our review, please subscribe to the channel and press thumbs up to this video. Good luck in your trading from the team of Liteforex.